Dear viewers, welcome to this episode of People Who Matter. We have a major issue on our hand. NRIs are worried that the rupee is going down against the dollar. They do not know what exactly is happening. Should we invest in India today or not? Should we hold on? Should we sell the rupees, convert it into dollars? It's a confusing world. I just thought to get the best perspective, I should talk to the person who handles these things on a day-to-day basis. So we decided we will talk to Mr. Ashish Somaya, CEO of White Oak Asset Management Company in India, to get to every aspect of what is happening between dollar and INR, what is that the future is likely to unfold with, and how should investors be conducting themselves while they invest in India. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the dollar INR rupee, I have a very eminent guest speaker today here, Mr. Ashish P. Somaya, the CEO of White Oak Asset Management Company. You have seen him multiple number of times on our channel, a person who is very articulate in disseminating whatever he knows to the easy understanding of the audience. Under his stewardship, White Oak Asset Management Company is garnering assets. It has very refreshing funds they have rolled out, and it's worthwhile that people look at the funds rolled out by the White Oak AMC. And to articulate today's position on dollar and INR, let me start talking to now Mr. Ashish Somaya. Welcome to this episode, sir.
Thank you, Dr. Bhatt. Thank you for inviting me.
Ashish bhai, the dollar is again rising. Currencies are not static. We all understand, but people get unnerved when the rupee starts a downtick. When rupee held on for 84 level per dollar for a long period of time, people were very happy. When you suddenly see rupee drifting from 84 towards 86.60, everybody is having their own story. People say rupee will drift out to 90, 95, 100. WhatsApp University is filled with all kinds of a prediction. Let's not take what WhatsApp University has to say, but let me hear from you. What exactly is happening in the currency market?
See, I think, like you said that, if it continues like this, it might go to 90 or 95 or 100. So today's speculation, for example, and you quoted WhatsApp University. So today's speculation suggests that if it continues like this, it will go to 100. So let me remind you, sometime back, what was the speculation? I distinctly remember in August 2013. So now I'm talking more than 10 years back, 11 years back. In August 2013, when there was a taper tantrum, when US was talking about raising rates, and in fact, India was clubbed as Fragile 5. And, we had to raise some $20 billion from NRIs and foreigners, RBI issued bonds at that time. So at that time, rupee was 69. And I don't know if you know, in August 2013, the equivalent of a WhatsApp University forecast was that rupee will become 85. So we were supposed to be, as per WhatsApp University, we were supposed to be 85 in 2013. We've crossed 85 in 2024. So what happens is that, and if you stick to these numbers, in the last 11 years, rupee has depreciated at barely 2% year on year. Because the worst depreciation was when it hit 69 in August 2013. That was very rapid depreciation. After that, we have seen so many things, poor economic performance. We have seen, COVID and so many things, poor corporate performance, many interventions in the economy. But in the last 11, 12 years, it barely depreciated at 2% compounded. And now, of course, when it is depreciating, I don't think there is anything to panic because, for example, I can tell you the rupee has depreciated versus the dollar. And maybe the pound is not very important for people, but it has actually appreciated against the pound in the last few months. So what is actually happening is that rupee is depreciating just like all other currencies are depreciating versus the dollar. I think after Mr. Trump came into power, there has been a kind of Trump trade. There has been a kind of flight towards the US. There is a resurgence of belief in US economic and corporate prospects. And maybe Mr. Trump is seen to be right-wing, business-friendly, etc. So I think that is where dollar is appreciating, and it's not just rupee. Practically every currency is depreciating against the dollar.
While we see that the rupee has depreciated a little bit from 84 to 86.60, my question is, has anything really materially changed? See, the currency equations are finally a function of inflation differential, the productivity, then the flow of money between two countries, tsunami of currency movement. Has anything materially changed to make this go towards much lower levels? How do you see the data points at this time?
Yeah, so Dr. Bhatt, I'll just take off from where I last left. So, if you see, to reiterate, the rupee is depreciating versus the dollar, just like practically every other currency has been depreciating. Whether one looks at Chinese yuan, whether one looks at Indian rupee, look at other currencies, you will find that practically in the last month or two, everything has depreciated against the dollar. So that's the first point. Second thing, which leads me to clarifying on your question, that there is nothing which has materially changed really. So, if you look at, say, for example, oil, if you look at, say, India's exports, if you see current account deficit, I don't think anything has materially slipped. I don't think anything on India's macro or economic performance has materially slipped. I think this is more a phenomenon of dollar appreciating rather than any one currency specifically becoming weak or depreciating.
So it's a kind of a knee-jerk reaction to Trump coming into power and the tsunami of currency moving away from India, which is resulting. It's just not India alone. I think it's moving from all emerging markets and probably heading towards the US. It's a tsunami of currency movement, which is creating this kind of a ripple in the currency market. But we saw a lot of FIs moving money out of India. We understand that there is a knee-jerk reaction. How do you interpret this FIA outflow? How much of money has gone out? Why did they move out? Is it a permanent flow out of India? Or is it just an opportune moment? Or will they come back again? From the experience of what you have seen in the past, how will you interpret on the FIA's outflows at this point of time?
So, I think even with FI flows, reading too much into it, take an example. I'll stay with, what we were discussing. If you see FIs have negative flow in the latter half of 2024, and more importantly, after September 2024. So FIs have had a negative flow in India after September 2024. If I were to see from 1st Jan to 30th September 2024, it was actually positive. Instead of just 2024, if I saw the last 15 years, right from starting 2010 to 2024, both years inclusive, only 4 years it was negative. 2024 also, ultimately when it landed up negative, was barely 100-150 million negative. Yes, we are in the month of January. It has gone further negative. But the reality is that it's not just India which has negative FI flow. If you see Brazil, Taiwan, South Korea, Vietnam, Thailand, take any emerging market, the FI flow has turned negative. Even in China, there was some stimulus announced in early October, barring that bit of blip. After that, even China has seen a collapse in stock markets and a outflow. So by no means is India being singled out for any special treatment really out here. In fact, if I just remind our listeners, in the last 20 years, in US dollar terms, India is the best performing stock market globally. If you take 5, 10, 15, 20 years, in any time frame, India is in the top 3 best performing stock markets globally, I am saying in US dollar terms. And when I say top 3, which are the contenders? Typically, it is US, India, and there are a couple of time horizons when Taiwan is a well-performing stock market. But otherwise, if you see globally, in dollar terms, India is amongst the top performing stock markets. So, the returns that one fetches in India, even after adjusting for depreciation, have generally been found to be quite attractive.
Well, we understand these points, but when the tsunami of currency happens, in or out, it will move the currency in a very appreciable way and people start reacting to it. If the currency is moving out of the country, is there any other sources of currency which is coming into the country? FI has pulled out the money, but we also have a large chunk of NRI inflows which are coming. We heard about FDI money is coming, or somebody raising money from outside of India which is coming into the thing. How do you see the figures around these inflow which is coming into the country? We are moved by the FIS outflows. Nobody is talking about how much money is coming into the country.
See, in fact, if you see, just before this recent bout of currency volatility happened, when the first bout of volatility happened, generally in India, the RBI doesn't have any mindset that the currency level should be 82, 84, 86 or 88. They're not looking for any absolute level of currency target. What they're looking for is a gradual movement, not a volatile movement on the upside and not a volatile movement on the downside. They want to protect business interests. They want to protect investors and give them some measure of stability or predictability. So it's not that India's rupee is pegged to the dollar, by no means at all. It's not pegged to the dollar, but you can say that it is creeping on either side. It's like a managed, currency movement to some extent. Now, before this bout of volatility, so when this bout of volatility started, to ensure that the currency doesn't drop very, very fast, first RBI actually started to sell dollars, right? Because when the money is moving out of the country, obviously they're demanding dollars. If it is left to the market, then the dollar would appreciate very fast and the rupee would depreciate very, very fast. So initially, when there is a demand to take dollars out of the country, the RBI started selling dollars. In that process, I think they gave up some $50-60 billion worth of India's reserves. But why I'm telling you this is because even after managing the slide gradually, even after doing that, our reserves are $640 billion. So India's external position is reasonably strong. That is first thing to keep in mind. And $640 billion is nearly 1 year worth of import payment. So that's that's in line with long-term averages, and it's never been much more than that. So 1 year of import cover, it actually takes care of. That is one thing to keep in mind. The second thing is that in terms of sources, so how did we cross 700 billion in the first place? We crossed 700 billion in the first place because for the last couple of years, there has been a consistent demand. I mean, barring 2022, in each and every year, pre-COVID, post-COVID, each and every year, FIs have been consistently buying. Apart from FIs buying, obviously we have NRI remittances like you alluded to. We have software exports that contribute in a big way. So I think all of these things are not suggesting to any panic really. We are absolutely in line with our long-term performance. And like I mentioned, this is just a managed or a gradual decline in the rupee, which the RBI has appropriately managed. They cannot allow the currency to be artificially jacked up because then it will kill the competitiveness in the export markets. It will kill the competitiveness or the valuation for foreigners also. See, because when foreigners are investing, one is the stock market valuation, but the second is rupee. If stock market valuation is cheap and at the same time rupee is 86 or 87, for them the market becomes even more attractive. Same thing applies for exports. If the rupee depreciates, exports become more competitive. So what is happening is that they are just managing that the currency should move gradually. It's not that they are trying to keep it at a certain level. If it has to appreciate, it will appreciate, but they would prefer it to appreciate gradually. If it has to depreciate, it will depreciate because of competitive forces, but it should happen gradually. I think that is what is being done.
You also mentioned that, it was a steep fall just around 2012, 2013, where from 45 to 68 rupees, it was a painful adjustment. And people remember the pain points, but people forget what happened prior to that. In the year 2000, the rupee dollar equation was 45. And the next bull run, the rupee literally appreciated to 37. People don't remember these points.
Absolutely.
And for the last 10, 12 years of adjustment, then it collapsed when the time came and the inflation rose. That's what happened. Subsequently, it has been quite a stable currency regime. What has changed in the last 10 years, particularly with respect to the current account, import-export balance? Has there been a material change or a perceptible improvement in the strength of the current account balance?
See, I think 2-3 things have happened. The vulnerability has clearly gone down. Because if you see India's attractiveness as an investment destination, not only in stock market terms, but even in competitive terms. So, when you say foreign direct investment in auto ancillaries, in electronics manufacturing, of course, software exports are rising. So multiple ways in which you look at it. First is that, when you look at as a market and as a place to do business, in both ways, if you really see, the competitiveness has clearly gone up. Because the competitiveness and the external macro has improved, the reality is that our ability to sustain or our ability to withstand, I would say, higher oil prices, that has also improved a lot. Right? Like previously, for example, if oil were to be 75, 80, you would find that there is some turbulence on the external environment. Today, if you see a couple of years back, the government makes it forecast assuming that oil will be $75 to a barrel. So that itself tells you that our ability to withstand higher oil prices, our ability to withstand, fluctuation in external macro, All of that has gone up purely because of the improvement in the external competitiveness. The vulnerability to external macro has improved quite significantly. And you can see one simple example that just our software exports is more than our oil plus gold bill. See, two things India really imports is oil and gold by a large measure. Obviously, we are always indebted to the NRI community and the remittances. That's also a source of strength. But for a moment, if I just leave the NRI remittances and just speak about other things, India's software exports alone more than covers the oil and gold import. So that is the level of change that has actually played out in the last few years.
You mentioned about exports. We always used to have more imports and less exports. The software is a major basket of exports, but in the last 10 years, in the export basket, have you seen any other changes? Let's say, like in case of defense or something else, which is getting exported out of India, or is there a stress on import substitution, or weaning India away from external shock of this oil and other things? What changes you have observed, and how does it stabilize the economy?
So, when I was mentioning to you about imports, I mentioned that we import oil and we import gold. One of the items which used to be big in imports was electronics. And now we are not discussing about electronics as a import. We have actually become a net exporter. So previously, all electronic gadgets, computers, mobile phones, white goods, a lot of these things were being imported. In the last 10 years, the CAGR is 17% for electronics exports. It has compounded at 17% CAGR in last 10 years. That apart, if you look at equipments and machinery, if you look at chemicals, pharmaceuticals, all of these, there is not much, gems and jewelry was a big export, but that has been under pressure. So if you leave that aside and just focus on electronics, machinery, equipments, chemicals, all of those things, India has become a net exporter in the last few years. And the CAGRs are anywhere from, there is an annual growth rate of 8-10% right up to 15-20% depending on the segment that we're talking about. So competitiveness is going up, and industrialization, investment in manufacturing. Now you can see, 2015-16 onwards, even before Mr. Trump came into power, clearly there has been a concerted effort to, change the trade balance with China. And there are a multitude of reasons for which they have tried to, diversify away from China. And that has been a solid message. It only got exacerbated after COVID. So you can see now, electronics is a great example. Auto ancillary is another example. A lot of these spaces, you can see investment happening in India and India becoming an exporter.
We observed that the rupee came towards 87, 86, 60 as I saw yesterday. It gives an impression that rupee lost ground against dollar, but if we adjust it for the last 3-4 years put together, I don't think it's really something which is to be worried about. You average it out over 3-4 years, it's very normal. And for the kind of returns the markets have given in the last 4 years, and you take out the money towards the currency depreciation, it's still a humongous amount of money people have made, whether it's NRIs, FIIs, or anybody else for that matter, have made a lot of money. I just want to know whether the rupee depreciation is only against the dollar, and or there is a depreciation of rupee against other currencies, say for example British pound, Singapore dollar, Australian dollar, or any other major currencies of the world, or if just against the dollar.
No, so Dr. But the depreciation is against the dollar alone. I distinctly remember, due to some transactions, I distinctly remember a few months back, Indian rupee to a British pound was about 111. As we speak, it is in the ballpark of 105 to 106. So clearly, if you see versus the British pound in last few months, it has appreciated by about, clearly 4 to 5%. Against the dollar, it has depreciated 3% or so. But against the pound, it has appreciated by about 4 to 5%. So, and pound being an important, relevant currency, it's not a small feat really. So that's just one example I know offhand. But yes, the depreciation is only against the dollar.
So what's your message for the investing NRI community? Be fear struck, stay away, or make best use of this market downturn, make best use of this rupee downturn, so you have a double chance to bring in more rupees now because you get more rupees because the rupee has gone down. Markets are literally about 12-13% down from their previous highs. So NRIs have a double advantage, in my opinion, that you get the benefit of both the things, the depreciation of the currency as well as the downtick in the market. So should they make best use of current times or wait for an opportune time, let the fear go away and then bring in the money? What's your suggestion?
See, I think two things I'll tell you. Number one is that whatever is happening is kind of transient or temporary in nature. The reason, like we started at the beginning, we said it's a Trump transition. There is speculation about how Mr. Trump will conduct the affairs of the US policies. I think there is some speculation around that. If you really see his pronouncements, let us say, for example, if he has been saying in past that countries like India and China, his allegation has been that we all are keeping our currency artificially low so that we encourage American consumers to import more and more. So if you see his stated priorities or policy, he himself has said things to the effect, which tells you that he believes that the dollar is overvalued and emerging markets or developing nations are keeping their currencies undervalued. So first of all, what is happening is contrary to what he wants or what he requires as a US administration, I'm saying. The second thing to keep in mind is that there is already some assumption that there will be tariffs. And because tariffs will be there, so how do you overcome tariffs? If you're going to make it, say for example, for the Chinese, if tariffs are imposed, it will make it expensive for Americans to import Chinese goods. Hence, say for example, China is allowing the currency to depreciate to kill the impact of the tariffs. And then there are other countries like India, which are, in some way, in certain spheres, competing as emerging markets. So if China is devaluing the currency, we cannot prop up our currency artificially high because ultimately we are living in a competitive world. So we also have to, bow to that pressure in the global market. And we also allow our currency to depreciate. It will depreciate. It is market forces. Because between China, India, other emerging markets, there is competitive devaluation or there is a depreciation in the currency. But I think this is just a transitory phase. There is assumption that there will be tariffs. If there are tariffs, the supplier nations need to allow their currency to depreciate. Hence, the dollar will appreciate. But a strong dollar is actually not what the US administration wants, number one. Number two, tariffs are not an end goal. Tariffs are a means to an end goal, right? By threatening tariffs, what are you trying to say? By threatening tariffs, you are saying that, okay, if you don't do these 1, 2, 3, 4 things, then I will impose tariffs. So tariffs are a threat, but the market is behaving as if tariffs have already been imposed. And that's how the world should work. So not to complicate it, but long story short, I think next 2-3 months, it's a transitory phase. Maybe next couple of months is transitory. Eventually, these things will settle down. So not to make long drawn conclusions that, okay, rupee will become 95 or 100 or something like that. Such conclusions are made in the past also. And, they are more alarmist in nature, but we should not get caught up with that. On your question, the second part, I think, yes, see, if I'm a resident Indian, if as a resident Indian, I lose sleep over the fact that my money is becoming less valuable in a globalized world. If I lose sleep over it, that is understandable. You all are, global citizens, right? You can invest. I'm sure you have dollar assets and you have assets in other parts of the world also. Now, if you look at India, of course, you belong to India, so India is a big part of your exposure. But I think I agree with what you said, which is that in the last 2 months, India's index has fallen 12 to 13%. And India's currency has fallen another, say, 2.5 to 3%. So for an Indian, the attractiveness has gone up 12 to 13%. But for somebody outside the country, the attractiveness has gone up by about 15-16% because the currency also adds to it. Now, on a 1 year forward, if you look at earnings growth in India, on a 1 year forward basis, now India's valuation is lower than long-term average. We are below 19 times on 1 year forward earnings. That is lower than our long-term average. So on earnings, we have become attractive. On currency valuation, we have become attractive. So it's ultimately when the currency stabilizes. When the currency stabilizes, you will see huge amount of FI flow coming in because parallelly the market has corrected a lot also. So I don't think we are going to be in this limbo. Maybe, first 2-3 months of 2025, it looks like, we are going to see volatility. But I would be very confident that second half of 2025 will be rewarding.
Dear viewers, one message is that when corrections come, they appear like a risk. When currencies get devalued, it appears like a risk. But when the event is over and when the cycle turns, you perceive this as an opportunity which you missed out. The best way to look at this particular problem is to take cues from these expert guidance which you have got on this channel right now and think about infusing money into the Indian markets when the risks have come down, when the averages are below the historical means. That is where is the key to making the money. Dear sir, thank you very much for all these inputs that you have given, and I'm very sure my audience will be more confident today and they will listen to your views than on the views on the WhatsApp University, and they will take meaningful decisions and make more money by investing in India. Dear viewers, please do consider investing into the funds launched by White Oak AMC. I'm very, very clear that they have brought fantastic funds in their product suite. I have been in this industry for literally 3 decades. I can say they have got one of the finest funds, and it is one of the AMCs which is really growing in the country. Please do consider investing in their funds as well. Thank you very much for your kindness to come on the show and talk all these points. Thank you. We remain gratitude to you, sir. Thank you very much. Dear viewers, hope the video that I have done today helped you to understand what exactly is happening in the currency market. Is Indian currency, is it really weak? What might happen in the future? You would have got the most informed views today in this channel. If it helped you to understand various equations, please do give me a thumbs up. If you are somebody who is yet to subscribe for this channel, please do hit the subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the social media handles on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Tuesday with yet another expert, with yet another topic. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.